Hey, good afternoon, Sydney. How are you doing? Oh, it's morning for you, right? Because you're in the US, I'm in Poland, so it's kind of a time difference, right?
It is morning. You're much farther along in your day than I am, but all is well. How are you?
I'm really good. Thank you so much. Thanks for taking the time to have a conversation with me. Uh, I really wanted to talk to you prior to meeting you again in the at the IT Nation Connect Europe in London. I understand you're going to be there, right?
That's right. Myself and quite a few members of our team will be there in a couple of weeks.
Okay. Because you belong to this group of people that I know that represent the private equity.
Correct.
Can you tell uh, can you tell people a little bit, the listeners, a little bit about your company and what your company does?
Absolutely. I'm the VP of M&A at Evergreen, and Evergreen is a holding company that acquires IT services businesses and operates them for the long term. So we are a bit different from some of your more typical private equity in that we actually never sell our businesses. We hold on to them forever. So it's a bit of a
Okay.
different approach that we're taking. That said, we are looking for and evaluating businesses in many ways similarly to any other private equity investor that you might see. For us, we are very focused on the MSP space. We love the recurring revenue. We love the mission critical nature of the services, and the longevity of that industry fits very well with our long-term model. So we've got a portfolio of nearly 100 MSPs globally at this point. And a recent part of our story has been our UK expansion over the last year and a half, which has been really exciting. We've acquired almost seven businesses there, and really building out that piece of our portfolio. I think it's a great market that we are excited to continue to build in. So that's a very high level on us, and we're taking a slightly different approach, but have spent a lot of time looking at MSPs and working across the space and the community.
I, I I remember from our earlier conversations that your model is actually pretty unique and
Hmm.
interesting because what you do, you actually support the owner, in improving the business, not only, financially, but also, kind of improving their operational model, right?
That's right. So operationally, we are not integrating and rolling up our businesses. So we leave the day to day of each business fairly independent. Our view is that, particularly in the MSP space, there's a lot of brand equity, regional presence, the relationships with techs and customers. And I think that a lot of that can get lost as you go through an integration, which is really hard to do. So our businesses operate independently from a day-to-day basis, but we do have an umbrella management team that sits over all of our companies called Lyra Technology Group. And that's really how we think about, how do we make these businesses better? Usually the first question we get is, wonderful, so you don't destroy anything, but how do you actually help make the business better? And that's where Lyra comes into play. So they play a couple of roles. One is the connective tissue between our companies, making sure that they're best practice sharing, resource sharing, cross-selling where it makes sense. They also provide a suite of resources to help solve pain points that our businesses may have. So building out a sales and marketing function is one we see a lot. Help with recruiting across a variety of functions, finance and accounting, all resources that Lyra has to help kind of take our businesses to the next level. And then they also do tactical things like working with vendors on purchasing power. So if you're using a piece of your tech stack that we have a master agreement with, can opt into to generally better margins there. So our view is that we don't want to break what's not broken in our businesses, but certainly provide support through this more decentralized model that allows kind of the inherent DNA of the businesses to continue to exist. And to your question on kind of the owners, a lot of flexibility there. I would say about half of our businesses are still owner run. They've wanted to exit and de-risk a bit financially and have the support of a larger organization. We also are happy to support when owners want to transition out, and we will backfill them with the appropriate leader for the business.
That sounds like an awesome service to the partners, to be
We think
honest.
so.
And how big is your portfolio of companies in the US? You said 6, 7 in the UK, but you have much bigger number in the US, right?
That's right. We have about 80 across North America, so US and Canada, and then we have 9 in Australia, New Zealand, and 6 in the UK.
Nothing in Poland yet.
Not yet.
Okay.
One geography at a time.
Sydney, uh, we had when I have a conversation with the resellers, okay, uh, we speak that they ask me always the question, why would I make the transformation to the managed service concept, or why would I build an additional kind of a leg in my business that is a managed service? Could we talk a little bit how an investor, an acquirer like you, looks at the channel partner when you consider whether you should step in and work with them? Is the reseller, why the reseller business versus MSP business? What is the difference in the valuation? How do you approach that?
No, it's a good question, and I think one that we've thought about a lot. And ultimately, what it really comes down to is the predictability of the investment that we're making, and that plays in the form of the predictability of the revenue. So if you look at the MSP space over the last couple of years, the excuse me, interest from investors has gone up dramatically. And that is because people have really realized how predictable and resilient the businesses are. We've gone through quite a few macroeconomic events in the last couple of years, COVIDs, recessions, et cetera. And MSPs continue to stand the test of time, recurring base, so that investors know that they continue to see revenue and profit coming into the business. So I think what is quite frankly more difficult to get behind as an investor with a reseller is that it's generally more episodic revenue. And I think there is a difference between a recurring software reseller and a hardware or product reseller. Like, those are fundamentally different service offerings. But at the end of the day, with a product reseller, these are one-time, usually large purchases that businesses are making. And so you lose out on that predictability piece of the revenue. And often those things are the first people need to save money, cut back on budgets, think about, keeping money in the business. They're not going to do a big project purchase or a big hardware purchase at that time. And so as an investor, as we think about weathering the inevitable economics of, a 5-10 year time frame, we need to invest in businesses that we feel sure are going to be able to do that. There will be natural fluctuations, right? But there's a chance with a reseller that all of your revenue just goes away at one point because people stop making big purchases. That's obviously a dramatic version of the scenario, but I think that's what we're thinking about as investors. And so for us, the highest value businesses are recurring revenue businesses, and particularly recurring services. And I'll talk about that in a second. But we're generally valuing businesses off a multiple of EBITDA. And, the next question is, what is that multiple? And one of the single biggest components as to what that multiple is what the revenue looks like. How recurring is the business? The more recurring, the better. And what is that recurring revenue? And when I say what is that recurring revenue, what I mean is, to my earlier point, you can also have resellers that, like a CSP, that's more of a recurring software subscription reseller. That's, I think, more attractive to investors than a pure hardware VAR, but it is still difficult in that it's a very commoditized offering. There's not a lot of value prop generally of a pure cloud reseller that's just reselling licenses. And you also are totally at the whim of the vendor, right? So there's only so much margin you can get on that business. You can only increase prices so far, and you're getting cut on the other end by the vendor. And so as we think about recurring revenue mix, recurring product is great, but really those recurring services that you are in control of, you can raise prices, you can sell more to customers. It's just a really important piece of the equation, and that's what we're looking for in the businesses we acquire, and that those are going to garner the highest valuations.
So if I hear you correctly, the MSP business is more attractive because it's more predictable and resilient.
Mm-hmm.
Meaning, you can see, the reseller can have a repeatable business. It can continuously upgrade and refresh, and when there is a refresh cycle, the customer will buy it, of course. And many resellers have been riding this refresh cycles for many, many years. But as you said, when the problem comes, those refresh cycles get delayed and postponed, and there's a challenge. And the second thing that I'm hearing is that, based on your assessment, the reseller business is way more dependent on the vendor. Like
Mhm.
reselling a license, I think you said, you're at the whims of the vendor. They could change. Like the recent kind of a story with VMware and Broadcom is a very good example of how major changes at the vendor have caused a major havoc in the
Mhm.
reseller industry, right?
Yeah. Yeah, there's always the question, and I do think this applies more on the, license side, but there's always the question of if the vendor is just going to go directly to the customer and that distributor role gets completely cut out. I don't necessarily think that's always going to happen. Most vendors don't want to undertake kind of being the direct to customer vendor, especially with the smaller business customer base, but they are going to squeeze as much money out of their partners as they can. And so there's only so much you can do to grow those businesses. And then again, I think it comes back to the value add. So as we look at MSPs, the service that they are providing to their customers is very hard to replace. The customers know who they're working with. They know what they're getting. There's a lot of trust. I mean, it's a backbone of how their business ultimately runs, versus they could go buy their Microsoft licenses wherever they want it. They're going to go to where, they get it the cheapest, or they're going to get it to their MSP who's already providing them a mission critical service through the actual MSP services they're offering, and it's easier to be a one-stop shop. So I think that's the other piece as to why the MSP specific model is very attractive. You ideally want to be the only place that your customer is going to for their IT needs. If you are just a hardware VAR, your customers are getting their other IT needs somewhere, either internally if they're big enough to have their own IT team, or from someone else. And it's going to be a lot easier for that someone else to just take over selling hardware as well. That's not an incredibly difficult thing to kind of add on if you're already in the MSP space. And so that value add of the recurring services is really important as you think about customer retention over time.
So now you've given me four different reasons. That's the predictability of the revenue. That's more independence from the vendor, the changes in the on the vendor side or on the customer purchasing side. The value of the customer that you offer to the customer when you're an
Mhm.
SP is much higher because your services are somehow unique to you, and you
Mhm.
is you. And the fourth one is you're becoming a single point of contact for the customer for all the IT needs. So every time the customer has any type of a need beyond hardware, the MSP can expect that the customer will go to him first and ask him for advice and recommendations, and potentially will purchase directly there.
Yeah,
Correct?
correct.
Uh, for reasons, great. You also mentioned EBITDA. Can you talk a little bit about this? How do you value EBITDA for the reseller versus the MSP? I mean, dollar is a dollar, money is money.
Money is money, but with a reseller, those dollars, there's no guarantee that those are going to be there in 6 months, in a year. And so it comes back to that predictability piece. And again, I think the distinction between a software reseller and a hardware, it's important as you think about the margins, because often software resellers are much lower EBITDA margins, again, because you can only get so much profit out of that when you're also working with the vendor and then reselling to your end customer. So a dollar is a dollar at a point in time, but the question is that dollar going to be there at a future point in time, and is it going to have grown? And it is very hard to predict that with a reseller versus the dollars that are coming from contractually recurring revenue that customers have signed 12, 36-month contracts, and they are paying monthly. Every month, you know exactly how much is coming from your customers. That is worth putting a multiple on because it's going to continue to grow and you know it's predictable, versus a bar, you kind of are buying a point in time set of money that you don't know if that's going to exist in the future.
How important is the EBITDA percentage? Are there any, kind of a thresholds or kind of a ranges that you are more or less interested in when you're looking at the discussion with the channel partner?
Yeah, it's a good question. Well, we certainly look at it with MSPs. I think there is kind of a sweet spot of, what I would call kind of 10 to 25%. I think as you get above 25-30% in an MSP, the business is often running too hot, and needs investment from a people or infrastructure side. And so as an investor, we look at a very high margin business and our first thought is, okay, we're going to buy this business, and then are we going to have to put more money into it, invest into more for it to be able to grow? Versus you look at a 15% margin business, generally what that means is the team is in place, the infrastructure is in place for that business to grow into a larger size. And so we are, in some senses, buying opportunity within that as well. I think there's also the flip side where, you look at a 4 or 5% margin business, and honestly, the first thought that comes to my head is this just a reseller? Because those typically are low margin businesses, to my earlier point, because there's only so much you can get out of reselling licenses and hardware. And so for us, that's less interesting as an acquisition target. Or if you're thinking about an MSP, what that low margin may mean is that you've over-invested in the wrong places in the team. It's not running super efficiently. You may be a low-cost provider to your clients so that you win business because you are the cheapest service provider, and that's really hard to grow as well. So there's definitely an art and a science to the margins that are attractive. I think you don't see as much margin differentiation across VARs because it's pretty set on what you're pricing your product at, the cut that the vendor takes, and then what you're getting from your customer.
When you say margin, you talk about EBITDA, not the gross margin, not the gross profit margin from the just to clarify that, because I think if you look at the margin of the reseller, if you look at the EBITDA of reseller, it's probably a single digit percentage, right? If you look at the MSP, now you're talking about the 10 to 25 points, which is a much healthier business as well.
Yeah,
that's a typical situation for you, right?
Yeah.
There's one more, and I'm wondering whether you look at this kind of with this kind of characteristics of a partner as well. Some of the MSPs have told me that thanks to the MSP model, they have a much more balanced situation within the sales organization. So it's rarely that one salesperson, kind of is closing all the deals unless it's the owner, and that the customers are more tied into a processes of the customer at the partner rather than the sales skills of a salesperson. And if there is a concentration into one customer versus many customers, do you look at this kind of a dimensions of a business?
Yeah, all of those things are part of, our investing scorecard and kind of what ultimately plays into that multiple that we place on EBITDA. So we talked about revenue mix. The customer bucket is a huge part of that. And I kind of break the customer bucket down into 3 components. One would be retention. Do you retain your existing customers? Do you grow your existing customer base? The second would be concentration. Excuse me. Do you have 1 or 2 customers that make up a significant portion of revenue? That is a huge risk for an acquirer. The chances that those customers bring IT in-house, they get acquired and go to another MSP. There's as much M&A going on in other industries as there is in the MSP space, where the single biggest driver of churn is M&A. And so it's not avoidable. But what it means is if you don't have a diversified customer base, the odds of losing a significant portion of your revenue are much higher. And so we care a lot about that concentration. And then thirdly would be new logos. So do you have a new logo generation machine? And then who is that? Is that the founder? And if they exit, there's suddenly no new sales in the business? Or do you actually have somebody in the business who wakes up every day and thinks about where the next new customer is going to come from? Most MSPs are founder-led sales. That's not unusual, and it makes sense as to why that is the case. But I think the most mature MSPs have moved that sales function to somebody outside of the owner or the principal, and that is very valuable in our perspective. Often we still acquire businesses that are founder-led sales, and we'll often place kind of a growth leader in the business. But those are all things that we're looking at as we think about valuing a business. So that kind of three-part customer bucket, the revenue mix, the growth of the business, and you didn't ask about this, but I think another big bucket is kind of the operational maturity. So what does the team look like? Is it running too lean? Is it overstaffed? Is the founder wearing 10 different hats, or have they really delegated swim lanes? Are there other managers in the business? A little bit more qualitative, so to speak, but important.
Okay, that's actually a very interesting, that you are looking at the operational side of the company, so in so many details. Do you also look at things whether the processes are somehow documented? So how do you look at this kind of stuff?
We do get into that in diligence. I think a lot of that kind of flows through to the initial things that we look at, i.e., the operational maturity, the financial performance. If you don't have some level of that professionalism in the business, it's not go. It comes through pretty clearly in the financials. You can even see, looking at a set of financials, if the revenue lines are broken out, you have your COGS allocated correctly, that means that someone is paying attention to those things in the business and thinking about how they separate them out versus, you see a business with just a sales line, just an expense line. Generally that financial and operational maturity is a bit lower.
Do you test anything around the employee engagement or things like that? Is this a measure that is important?
It is. We initially will do a cursory even review just, through Google when we start looking at a business. With generally when things are bad on the employee front, you can find it pretty easily. And then, as we go through diligence, we ask for any ENPS surveys and things like that. I think you have to be careful on that. We're not going to talk to employees during a deal process. We don't want to spook them. And so, some of that you're kind of taking a bet on through trust in the seller, and what you learn through the diligence process. But as much information as we can get on that, we do.
So how much is interest is in your kind of in the investor community, in the reseller business in general? How much, where is this kind of a threshold when you say like, oh, I'm not going to even look? Or are you looking at pure resellers? If not, where's the threshold when you even start being interested in a reseller?
So we won't look at pure resellers. Definitely not on kind of the non-recurring side. I think that there's probably slightly more interest in like a CSP or recurring license reseller, but even still, we need to see some component of services that makes them sticky. I would say our ideal business is probably 70% recurring, 50% is recurring services, and 20% is, recurring product resell. And then, the remaining 30 is a mix of hardware and projects. I would say that's kind of the ideal MSP profile. If we're looking at a CSP, for instance, we will want to see that there is a recurring service component, probably at least 25-30%, and then that piece is growing, so that we can chart a path to that becoming more of the business over time. So for us, we're not looking at pure resellers. There are people that are, I think some acquirers may be looking to add on a piece of their business. They already have a large MSP. They want, a cloud reseller as part of their business. They may acquire that and kind of tack it on, or on the hardware side to kind of build out, become that one-stop shop service provider. So I think you can see that. But what I have not seen is aggregators like we are that are doing high volume M&A of just resellers. I haven't seen that.
Do you have any, do you have any data, or at least like an indication of what are the multipliers for the reseller versus the MSP? Any recommendations, advice, or where to look for this kind of stuff?
Yeah, I'm going to refrain from talking specific multiples and having that be memorialized and held against me. But
No
I would think
promises.
that
No promises. No
a
promises.
pure reseller is quite a few. Let's just say, for instance, we're looking at an MSP. Let's say we value it at 7 times EBITDA. I'm looking at a pure hardware reseller. I'm going to say 3. Like I think it can be as much as half on the multiple front. I think a recurring cloud reseller, you'll see higher, but not as high as the recurring service bit.
Okay. So it's pretty significant difference. You can
Yeah.
basically double the moment you transition your revenue into a more recurring revenue MSP type of revenue. You can, with the same amount of dollars that you make, maybe not the same amount of revenue, but the same amount of dollars that you make, you can easily double the value of your company. And as we said, it's this value is tied to the value that you are providing to the customer, the predictability of the business, and the independence of, from the vendor and other market impacts that might happen.
Yeah.
Sydney, thank you so much. You will be in London, so
I
if
will.
there are any resellers that would like to ask for your advice, either you or some other people. I know you are super busy, so it's
No,
I'm
no,
not.
no. Happy to chat. What goes around comes around in this industry, and it's always worth a conversation.
Which is a great message to everyone, because I'm actually extremely encouraged by the willingness and the level of sharing and collaboration that is in the MSP space. It's something, like this community approach is extremely powerful. So thank you
Hmm.
very much for that as well.
Absolutely. Thank you for having me. It's great to chat about it.
Thank you. Speak to you later then.
All right. Thanks, Magic.